Self-assessment season is upon us, and if you are required to do so, your personal tax return needs to be completed, submitted and paid up by the 31st of January. There's one confusing concept that always rears its misunderstood head in a self-assessment tax return, and that is payments on account. In this video, we will cover what exactly is a payment on account for your self-assessment return, why do you need to pay a payment on account, how does it work with a clear example you can use, and how can you reduce your payment on account legitimately. Before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you free quality advice from real qualified accountants. When your self-assessment tax return is completed, ready for submission to HMRC, quite often HMRC will ask for what is called a payment on account. Now, a payment on account is not additional tax to pay, but it does affect your cash flow. Payments on account are made twice a year and allow HMRC to collect the following year's taxes early. It is a mechanism designed to help you spread your payments over 2 installments, but the real reason is HMRC wants to make sure it gets a boost to their cash flow and to minimize their risk of bad debt. You only have to make payments on account if your self-assessment tax bill for the previous tax year was more than £1,000. So let's explain this with an example. If you are completing a self-assessment return for the 2019-20 tax year, which is due by no later than the 31st of January 2021, then your previous tax year will have been the 2018-19 year. Let's suppose your tax bill in 2018-19 was £950, and because this was under £1,000, you will not be required to make any payments on account in the 2019-20 self-assessment return. Follow me so far? However, if your tax bill was over £1,000, then you will be required to make payments on account in your 2019-20 tax return. Before we continue with today's video, we're thrilled to be launching the Accounting and Tax Academy membership site early next year. We'll be posting downloadable resources, tax tutorials, and in-depth courses that you can't access anywhere else. And the best part is it's absolutely free to join. Head to the link in the description box below and register your interest today. So here's a payment on account example. Let's say, for example, your tax bill for the 2019-20 year amounts to £2,500. HMRC will take this figure and assume your tax bill for the 2020-21 tax year, which is the following year, will be of a similar amount. Because of this, they will then request you make 2 payments on account, in other words, advance payments of £1,250 each. The first one on the 31st of January 2021 and the second one on the 31st of July 2021. So on the 31st of January 2021, you will actually be making a total payment of £3,750 to HMRC. That's £2,500 for the 2019-20 tax year and instalment number 1 of £1,250 for the upcoming 2020-21 tax year assessment. The good news is that this payment on account is used as a credit against your 2020-21 tax bill. So in other words, if your tax bill in 2021 ends up as, say, £3,000, you will already have paid £2,500 on account, and therefore the balancing payment would only be £500. However, in your 20-21 self-assessment, there could be further payments on account due for the 21-22 tax year if your tax liability for the year is more than £1,000. If you have any capital gains or student loan payments to declare in your self-assessment, then these items are not included in a payment on account. You will have to pay these as part of your balancing payment. In other words, there and then. Where your self-assessment liability for the tax year in question can reasonably be expected to be less than that of the previous year, you can apply to reduce your payments on account. So following on from the example earlier in this video, your tax bill for the 2019-20 year is £2,500. You will have 2 payments on account of £1,250 each. Let's suppose you reasonably expect your tax bill in the following year, that's the 2020-21 tax year, will be around £1,500. then you can claim to reduce your payments on account to £750 per instalment and provide an explanation in the box as so HMRC are aware. But be very careful here. If you do claim a reduction in your payments on account and then find you have more tax to pay than expected, you will have to pay interest on the underpayment and in some exceptional cases, a penalty too. I hope this video has helped you to understand a bit more about self-assessment and in particular payments on account, and has taken you one step closer to knowing your numbers. As always, let me know in the comments your thoughts on today's video or if there are any topics you'd like us to cover in the future. Finally, be sure to hit that subscribe button as it really does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.